What is up, YouTube? Welcome to the first video on this channel. Right now we are live trading ES and NQ. Right now what we are looking for is on the 4-hour time frame, we have price making lower lows on NQ here, but price is taking this same high on ES. So right now we have a little bit of SMT, which would lead me to believe that price wants to go down, but we need SMT with context. So the reason why I feel that price is going to go down is because if we were to just look at NQ and we took off this SMT, we would see that price has now disrespected this 4-hour bearish fair value gap here, but we have one more left right here. So right now we're just building the narrative. So with price sweeping all-time highs for ES, but not taking that same high for NQ, we would expect first to have at least a little bearish structure, at least until the equilibrium of this new price leg that was made the day before. So, sorry. This is when we're going to scale into our smaller time frames to look for areas of interest. So let's go down to the 1-hour time frame. And we're going to go into the 1-hour time frame on ES as well. And we're just going to look to see if we see anything that could be interesting to show us opportunity to get into the market. So right now we have this new price leg that was formed yesterday. And the equilibrium of this move would be right here. So this fair value gap is what I would expect the draw to be, which would be internal liquidity. And once we get here, we look for our model and see that if we react and give us a model to go back up to take these highs, or if we're going to displace lower and come down to the bottom of this range here. What that model will hopefully look like is like this from yesterday. At close to the end of the market yesterday, we had a beautiful model setting up. So we had our buy side, sell side, and what we have is the sell side of the curve here, and then the buy side of the curve here. Unfortunately, this was at the end of the day, so I wasn't able to take this setup, but this is what a beautiful setup looks like. We have our low resistance liquidity run. We have this engineered buy side liquidity that price ended up just running through. So hopefully we get a model like this to where we can recognize when the reversal will happen for price to go up. This was NVIDIA earnings yesterday that pushed us all the way up, but on a regular day, this would be my price target, would be external liquidity after we took out all of this internal liquidity inside this range. Whoops. So right now we're holding this 4-hour bearish fair value gap along with the SMT. We have this bullish fair value gap on the 15-minute that right now was not holding, and now it's holding as an inverse. So that's another sign showing that price wants to go down. We do want to see a little bit more structure to get a valid confirmation. I would like to see price make a new fair value gap after breaking these lows to help show me that price wants to go back down to equilibrium of this leg here. And we're just going to delete this to make the charts less confusing. And then also on ES, that was the same situation with sell side of the curve and buy side of the curve. So we have sell side coming down here, and then our low resistance liquidity, and then buy side to shoot up and take these relative equal highs right here. So I'm going to delete that too. So with ES right now, what we're looking for is we need price to displace through these lows. Just to show me a market structure shift, just to show me that we're headed in the right direction. And then we're going to mark out what equilibrium looks like on this price leg as well. That was made from last night. So we have this fair value gap here. So this is where I expect price to come back to, because one thing that I've learned through trading is that price is going to come back to engineer liquidity, re-establish fair value gaps, so revisit fair value gaps, and reprice to equilibrium. So those are the three things here. So all we've done is swap liquidity. So now what price will do is revisit fair value gaps, retrace to equilibrium, and create new liquidity. So that is our bias for the day. So we're going to hopefully look to catch these shorts. And then CL, if this wants to move, CL, oh, actually looks like we might be ready to go on CL here. But just to give us the narrative of CL, we have an overall bullish higher time frame that I'm looking for price to hate when that happens. Right here. So we have a larger sell side of the curve, buy side of the curve. No matter what time frame, market is fractal. So we have sell side and buy side. We have external liquidity right here, which is the most prominent high. These highs don't really matter. From chart time, you'll be able to see that. If we displace through these highs, then we'll start to focus on these highs up here. But we at least need to retrace back to equilibrium of this range here. And then I believe once we get back to equilibrium, then we can start to target these stacked equal lows down here. So let's delete that. And CL's been a little bit choppy lately, but we're going to trade it anyway. So far what price has done is we displaced through this sell side liquidity with this fair value gap. And then we came to sweep this level of liquidity. We failed to displace through, and then we market structure shifted here. So then now we have our breaker. Our breaker block, which was held perfectly. And then we also retraced to a 4-hour bullish fair value gap as well. So I will leave that on here. And we have these relative equal highs as our first target. So let's look on the smaller time frame, see what's going on. So beautiful price retrace off the breaker and for, the 4-hour bullish fair value gap, giving us these nice, beautiful candles, a lot of displacement in it. So we can see all we would need now is a retrace. We are displacing through this high, which shows me price wants to go higher. So we also have this area of internal liquidity that we would target as well. So as you guys can see here, we have sell side of the curve, and we're starting to form that buy side of the curve. So no matter what time frame you're on, it is all fractal. So then now we would just wait for price to give us a retracement, and we just have to be patient. We know where price wants to go. We have these stacked equal highs here and this internal liquidity. So we have buy side here. We're just waiting on price to give us an opportunity. So we can go back to look at NQ. Okay, so notice even with the bearish SMT, price is still pushing up. We're failing to make new lows. We're already in the open, but we also have news that should be coming out in 1 minute, flash manufacturing PMI. So we'll go down to the 1 minute. Now I'm just going to delete all these extra boxes because we don't want all that clutter. This is that 15-minute bullish fair value gap. Still holding his inverse though. So all we need to see is price to show us where we want to go. But if price is just throwing wicks down here and holding this bullish fair value gap, oh, news just came out. If we're still holding this bullish fair value gap, then there's no reason to take shorts. And notice with price displacing through here, we would expect price to return to equilibrium and then give us a model to come back down here to the below the range. But because we have that bearish SMT from ES, we just have to be a little careful on both sides. So with news, let's see. Looks like we are now making new highs, pushing through, and we might be disrespecting this bullish fair value gap, which in turn would show me that price wants to go higher, which means price is going to push past these all-time highs and go faster. This SMT will not hold, and we have to adjust. So we also have our two levels of buy-side liquidity here that have been taken on ES but have not been taken on NQ. So we would just look to see if this is going to be a manipulation move for us to go lower. We take this internal buy side and start to displace lower, or if we continue through, then we will look for a fair value gap to look for an internal model for a price to go up and catch these highs, and we look to be a part of it. So then now the only thing we have to do is wait and be patient. CL looked like the most promising so far. Putting Q over here so we can just watch. See, on the 4-hour time frame, we are just pushing. So we might push all the way through. All we have to do is wait and react. But CL is actually giving us everything that we want to see here. So we are just waiting on price to give us a retracement back to equilibrium of this new price leg that we're forming. And so we have sell side of the curve here. We don't have much buy side liquidity engineered here. Probably on the smaller time frames you'd be able to see it better. Yeah, on the smaller time frames you can see the lower highs and lower lows, which just means that price didn't engineer as much liquidity. So we are going to retrace back here and should have a nice clean move up. So the only thing that we need is patience. Look, we still have 11 minutes left, but we have this 15-minute fair value that will be forming. So we'll look to see what price does inside once this price leg forms. And just to let you guys know, we do have a fresh 150K Topstep that we will be trading, and I will be updating every day. I bought it a couple days ago for the start of this YouTube channel. So you guys are going to watch me blow it, pass it, whatever happens, happens. You guys will be here for it. But as we can see, nothing really yet. NQ is blowing past this fair value gap here, so it's showing me that SMT probably will not hold, and we have our draws and liquidity, which are going to be higher. So I will delete this. And like I said, normally we would expect that NQ's draw would be higher, but just with that bearish SMT, you just want to be a little careful taking shorts, especially on such a high time frame. And what we want is for our smaller time frame bias to align with our larger time frame bias. That's where we're going to get the best trades. So we are going to just react to what the market is showing us and go from there. But it looks like we don't really have anything right now. Let's see if there's something in here that we could have watched. So we respect the consequent encroachment of this fair value gap here. And this was open. Yeah, there's nothing here that I would have taken. We had this fair value gap right here after we swept these highs, but nothing really I would have taken here. Maybe on like a 30-second time frame, but we don't need to always take every trade. We don't have to worry about, oh, I could have been part of this, making so much money. The only thing that we need to worry about is taking the best possible trades and living with the results of those trades. So I'm going to delete that. That was that inverse I was holding. Obviously not anymore. And if you guys haven't been able to tell already, the 15-minute is my favorite time frame to look for these setups. So we'll be back when price shows us where it wants to go and gives us opportunity. Let's see if we displace through these highs or this ends up just being swept and we displace lower past these lows here. And give us a market structure shift. And then that'll give us more confirmation that we want to head back to equilibrium of this new price leg, along with this 4-hour bearish fair value gap holding, and then that SMT would end up playing out. But we don't know where the market's going to go. We just have to react and adapt. So back on CL, we are starting to get just a little bit of a retrace here. Just waiting for price to retrace back to equilibrium. The 10-minute time frame looked the cleanest. So we have our 10-minute breaker block right here. And then we have our fair value gap inside of this breaker block, which would end up being a unicorn setup. This was the 1-hour breaker block that we reacted off of earlier. So I'm just going to delete it just to clean the charts up. And then this is the 4-hour bullish fair value gap that we ended up holding. So just to clean the charts up, I like to delete those and just look at what we're looking at for our entry. But we already have built our bias that we have sell side of the curve here, buy side of the curve here. And then the reason why this is my breaker block, this is the last up candle that ended up taking these lows here and then taking these highs up here as well. So notice from here, price took these lows and then ended up taking these highs, making this candle the breaker block. And if that is true, then this will be our manipulation leg as well. And we can start to mark out our standard deviations. So the 1 lines up perfectly with, not perfectly, but almost to these equal highs here. And then we have the 2 to 2.5 deviation that the 2 is close here. And then 4 is a bit out there. Let's see where that lines up with. Nothing really. But with this model, we should at least see these relative equals highs here. The only thing that would be in our way is this fair value gap. But with the model that we are presented with, which is the model that I trade, it will show us that we do not need to worry about this bearish fair value gap because we have conviction. We built the narrative for our trade, so we're not worried about anything that would go against our trade. We will just look to see how price reacts. And Q looks like it's just sweeping this high, so we might end up getting that. So if we go to a smaller time frame, oh, we still are on the 15 here. Go to the 5. Yep. So it looks like we're gonna sweep this, and then hopefully throughout the day displace through these lows, retrace, and then we're gonna come back to be able to make a trade to get to equilibrium here. But so the 10-minute looks good here on NQ. Or I'm sorry, CL. And with CL, we have to make sure that we're taking price in discount when we're looking for buys. With NQ and ES, it's a lot easier to take trades like in this fair value gap would normally hold. It doesn't have to be in discount, or yeah, in this case discount, because you have to just recognize the instrument that you're trading. You can't, it's a more volatile and crazy pair that we're going to be trading here. So with these large moves, you get tapped and then you run. With CL, it's a little bit more choppy, so you have to just exercise a lot more patience. But that just comes with recognizing what you're trading and building that patience. So that's just what we're waiting on right now. A little bit of time has gone by. CL starting to push up. Notice how I said that price needs to retrace to equilibrium. Taking this fair value up just makes it a low probability trade because you're still in a premium. You want to, with CL, you will experience more losses and wins taking this fair value gap rather than this one. But what the model would be is we enter this fair value gap, we put in 2 lows, so we scroll down to the 1 minute time frame, wait for price to sweep the low that initially put in this fair value gap. So this is the first tap of the fair value gap. So we would put our sell side right here. So this would be the internal sell side. We wait for that to get swept, and then we wait for displacement with a market structure shift here. Wait for price to tap back into the fair value gap. And this is our entry right here. Stop below the candle that made the fair value gap, and our price target would be at the high. This is not even a solid trade, not solid risk to reward, nothing that I would take. So you would take your first target off here, and then you would leave your runner to the initial target that we had in the first place. But like I said, we do wait for a discount when it comes to CL. Notice here what price is doing. So even though we came to that fair value gap that I said that I wouldn't take, and we ended up coming here, we ended up pushing price higher, which in turn pushed equilibrium higher. But if that was to work out and we were taking that trade, then we should not be respecting bearish fair value gaps. We should only be respecting bullish. But we respected this one, and we respected this one that was made, and now we're respecting this one that was made. So all that price is doing right now is engineering buy side liquidity. So now we have this area buy side, we have this area buy side, and then we have this area buy side. So all we're doing is engineering buy side liquidity, making the sell side of the curve. Oh, whoops. Right here. So when we get to equilibrium, we have these targets to reach once we start to make the buy side of the curve here. So all we have to do is continue to be patient. But like I said, yeah, taking that fair value gap would lead to more losses because we're not supposed to be respecting bearish fair value gaps once we get the model. And we have gotten the model, which means that we should be headed to these targets up here. So we did end up getting price pushing to those relative equal highs that we ended up talking about at market open today. We just had inefficient price action. Only thing I could say is that when price ended up making this last push up right here, we did end up moving equilibrium a little bit up. We pushed equilibrium up a little bit. So the candle that created this fair value gap on the 15-minute time frame ended up being an equilibrium candle. We did revisit it right here, but let's see. So the low, I'm looking right here. So the low for this candle was 77.88, and then the low for this candle was 77.88. So you ended up making relative equal lows right here. So I wouldn't take a buy with relative equal lows anyway. So it was really just inefficient price action right here. So ended up having this consolidation, and then we ended up getting the pump, but we ended up making equal lows here. So there's no great opportunity on this trade to take, so we're not going to force anything. The only thing that I can say is that we are sweeping those relative equal lows. So now on this price leg here, let's go to the 1 hour time frame. Now equilibrium has been pushed up even higher. So now we will wait for price to retrace back into this fair value gap. We still need price to retrace back into a fair value gap regardless. So we might end up sweeping these internal sell side right here. So this would be our internal sell side. So now price would be in equilibrium once we get back to here, or even a discount actually. We might retrace back to OTE and then give us the model. So we just have to wait and see, but there's nothing that I honestly would have taken to catch this move up. So we just have to continue to be patient. NQ, not doing anything at all. We did have, like I said yesterday, we had a large move in the overnight session. Let's see how big that move was. Whoops. One more time. My phone was in the way. 562 points. Large overnight moves like this, the morning session tends to be a little choppy. We don't really move. So even though we had the 8:30 red folder and then 9:45 red folder, still got inefficient price action. So the PM session might clean up, might be better, show us where we're going. So no trades taken, and then that's just the discipline part of it. You know, we don't want to force anything. We don't want to look back and be like, oh man, it's 11:11, so I started recording around 9:30. So we're going into the lunch session. We don't want to look back and just say that we forced trades. You know, we stayed disciplined. We waited for price to come to us. We didn't, we waited for price to come to our conditions. We're not going to bend to price, because that's when you start to force trades, go on tilt, and then take bad trades. So as you guys can see, still at 150,000, have not moved. And we are going to wait to be able to take a good trade. And if we don't end up taking a trade today, I might trade tomorrow. I may trade tomorrow. I may not sure what my schedule is looking like. But regardless, that doesn't mean that we force a trade today. We just wait for the best opportunities, and then we take trades in the market. Probably going to wrap up the morning session. No trades taken. Price just consolidated the whole time on NQ. Not probable market conditions, and the reason why was due to this large move from the overnight session. And then CL did not give us anything that would have made me want to take a trade with the consolidation that they had and leaving these equal lows. But if those equal lows do get taken, I will look, because now we are in discount. I will look to take longs after these are taken. And just to recap, I did not take this trade. Still at 150,000. Haven't taken anything today. And I will come back in the PM and add to the video. But if nothing happens in the PM, then this is it. Thank you guys for watching, I think. What's up, YouTube? So I am back, actually. Solid setup for me right here. So we came back here to this new price leg that we made from low to high. Got back to equilibrium. Created this 15-minute bearish or bullish fair value gap, and we are currently above that 4-hour fair value gap. So what I'm looking for here is, so we have sell side of the curve. Let me find this. Oh, actually, did we just tap in? We actually did just tap in, so I am about to go long right here on NQ. Well, our stop going to be right here. 75 points. Add one more contract. So, reasoning behind this setup is we have sell side of the curve here. We retrace back to equilibrium of the range. We put in highs. Put the magnet back on. Put in buys here, or sorry, lows. Swept those lows here. So this is our internal sell side. And then had a market structure shift with displacement back into the range, but we did not take the high on either ES or NQ, so there's no bearish SMT. So, and then also what we're going to do is we're going to draw in our standard deviation. for the manipulation move to see where we can target. So we're going to draw out, so this is a standard deviation. We are going to draw out this box here, and we are going to set limits. One cell limit here at the high, and then we're going to put one cell limit at consequent encroachment of this. Whoops, that is the wrong one. One limit here. So that will be our runner. Once we get to this high, we'll get to break even. But notice the -1 where it is. So as soon as price gets to this -1, I'm going to move to break even on this trade. But stop is below right here. So we'll just put that in as well. 2. It's looking good so far right now. I was setting up the stream, so I didn't even set my limit because I wanted to make sure I got this on recording. But we have our sell stops. Okay. So, like I said in the beginning of the video, the market's fractal. Every time frame I could show you, we will have a setup like this. So what we did after we swept those highs or swept those lows is we market structure shifted with displacement back into the range, not taking this high. Because if we would have taken this high already, I would not have entered this trade because the objective would already been met, or at least the objective that I am confident that we're going to go to. And the ES also did not take this as well. So there's no bearish S&T that is in our way on this trade. So I will move to break even right here. First TP is going to be about 18 points, nothing crazy. We did just make this new fair value gap, and this is what you like to see, is when price will make new fair value gaps out of, you know, old ones that they just revisited. So I will look, if we don't take this high, I will look to scale right here and add an extra contract. So I'm going to set the sell limit, but I think we are just going to get tapped, or sorry, the buy limit. I don't know why my terminology is off right now, and I hope I've been speaking into the mic this whole time. LOL. But so that is the context of this trade. Just wanted to make sure I caught it live for you guys. So we have that's so ugly, sell side of the curve, and we are starting to push. Stop has now been moved to break even. But this was a great trade. I'm taking this off because now this objective has been hit. That is where I'm confident the market would go. So then now I'm just looking for price to come up here and tap us. But actually, F that. LOL. Alright, so great first trade so far. Because we did hit the -1. I don't want to be greedy, you know, looking for more ticks. I am confident we go here, but I just, you know, don't want to be greedy. And there we go, though. So now that has been hit. And then now we just have that runner. We have our stop at break even. So far, if I would have gotten in down here like I wanted to, because where I'm supposed to be in is, I'll draw this out for you guys, right here on this fair value gap, which, like I was stressing in the beginning of the video, oh, whoops, wrong price leg. What I was stressing in the beginning of the video, equilibrium. It's such a powerful tool. And we are making new fair value ups. We could possibly run, but we are, you know, real close to these all-time highs. We're around there. So you never know what's going to happen. You make sure you secure some money. So looks like we made 323 locked in so far. And then floating, we're at $618. And then I believe from, where did we get in? 63 3/4, 63.75. Sometimes I say it like that for some reason. So 63.75 and consequent encroachment 41. So that's like 20 times 41.50. Somewhere around $800-900 will be the runner. let's make it 36. We'll just take it at the 2 if our runner ends up going up there. Well, actually, and this is why I wanted to live trade this, so you guys can see like where I'm looking. Oh, we are up here for our next target. Let me look on the smaller time frame, see if there's like any buy side. We do technically have this right here. So just a higher low on the 15. And when I go to the lower time frames, you'll be able to see. Sorry. So we have right here. And if it does line up, then I will put it back. Yep, lines up in that box. So actually, I'm going to keep it at consequent encroachment. Like I said, I'm just not going to get greedy with, oh, I moved the wrong thing. Just not going to get greedy with the ticks. Like this is 41.50 and then this is 46. So actually 3.5 points. And that's if we run up there, you know, while we're still in this trade. But this was supposed to be my entry, was the fair value gap, but I didn't end up getting in. But I just knew that, you know, after doing the math, that just want to make sure my risk management was correct, basically. Because regardless of how confident I am in the trade, look at that. Regardless of how confident I am in the trade, you know, I still risk the same amount I tried to risk. Around on the 150K top steps, around like 500 to 600 a trade. But yeah, now we just sit like there's nothing else left to do. Look how we respected. Look at what we did when we came back to this fair value gap. Revisited and then pushed, and that's what we love. So if we came back here, I definitely would have scaled another contract to get up to 3 contracts, and then, you know, mitigated my risk by moving my stop loss. But this was a solid trade, most definitely. But we had to wait and just be patient. Didn't force any trades, waited for the model to present itself. So I'm gonna delete this. And then you guys can go back and rewatch this video. And I'll try to make sure I have everything annotated so you know what these boxes are. So we have this 15-minute bearish or bullish fair value gap. We tapped it right here. Ended up doing, also it looks like a form of accumulation, manipulation, then distribution. So that is another ICT concept as well. So we have the accumulation right here. And then we have the manipulation here. Let's put that like to the side, inside. Let's do bottom. Bottom. Yep, see? Accumulation, manipulation. And then the distribution after that. So what we did is we formed a support and, you know, ICT concepts. This support with all these stacked lows, people will feel like, oh, okay, price is holding this area, we'll definitely be able to shoot up. But what banks do is they can't put in their entire position just like we can. Like the same way that I just entered those positions, banks can't do that because their positions are too large, so they need pause. So they need orders going against their positions, because this is a zero-sum market. If I'm winning, somebody's losing. So people that went long here put their stop losses right here, and then they got taken out. Oh man, that sucks. Manipulation. But what we do is we wait for that, and we wait for price to show us that it wants to go in that direction, We wait for a retrace, or if there's bullish SMT right here after the first displacement candle, I'm in the trade because I have a general idea of where price wants to go. So hopefully, so we made this new price leg. This is equilibrium right here. Not going to chase the trade or look to add positions, but we should, if we are going to go up here to buy side, our stop loss should be safe. We shouldn't get taken out at break even. But now this is no risk on this trade at all. Oh, and then let me mark this distribution. Oh, and I'll put that back at the top. Oh, okay, top. I don't know. You guys know what I mean. That's not what I wanted to delete. And then now we just sit on our hands and watch it play out. But it's looking like a really good trade. Look, another fair value gap. So that's what I meant when I said earlier that if we are going somewhere, the fair value gaps in that direction are supposed to be respected. So the amount of so right there we had this bearish fair value gap become disrespected because we're not going lower anymore. We have this bullish fair value gap being respected. It's also at equilibrium. And then once we left this fair value gap, we created this one that got revisited. We shot right out of it. And then this one, we kind of disrespected this a little bit, but I know that people hate like ICT traders hate like retail terms or like candlestick patterns like morning star and stuff like that. But this candlestick pattern, this is what I believe in every time. This is a fake out candlestick pattern. This too, one move down and one move right back up. Like this one never happened. So when you see something like that, you normally know you're getting liquidity. This is kind of the same concept. Maybe on the 2 minute it looks the same. Yeah, see, we swept it. One move down, one move right back up like it never happened. So that's one that I personally will not swear by because I'm trying not to do that anymore. But you guys know what I mean. Let's go to the higher time frame. So perfect entry. We might make a new fair value gap, and then if we don't get here yet and we make this new fair value gap off of this price leg, I will look to find a model that looks, if not identical, exactly like this. But it looks like we are in the right direction for sure. And even though I was confident we were going to get here, still take off your contract. Make sure you pay yourself for being right. You can never get greedy. Once you get greedy, because a lot of times I've done it in the beginning of like when I started like knowing what I was doing, and the reason why I was losing, I was like, man, I was floating like 1,800 today, and then I didn't take any money off, and then I ended up making nothing, and I actually ended up losing on the day. So greed like kills, and if this doesn't work out, I still paid myself. I still made money, and you know, on the journey to getting this funded. That CL trade wouldn't have worked out. Didn't take it because this looks nothing. Well, looks nothing like this. Sell side, buy side, precision. So, but we were right in the direction of CL. And all you just have to build the narrative of where you're expecting price to go and find a model that allows you to execute that. I'm just looking to see if there's anything. CL's headed to this buy side level here. If it displaces through, we continue. If it doesn't, then we look to target equilibrium. But you have to wait for the reaction. You can't just assume. You can't. This is a really higher time frame level. Is it a daily? It's a daily level. Is it a weekly? It's a weekly level. I don't know if we'll get to a month. It's a monthly level. Okay, 1 minute market structure shift is a low probability trade to take at this level. It's a weekly level. You need multiple daily candles to show you where price is going to want to go from there. Anything before that, you're jumping the gun. You don't need to be first to the party. You just got to make sure that you're there before everyone, is having fun without you. So I'm expecting it here. Let's look on Tradeovate. Hopefully you guys can't get my information from this. I just want to see if there's a 30-second fair value gap that I could have taken where I was expecting the reversal. Okay. So see here from the start. So we had those stacked equal lows. And we had this fair value gap disrespected. Market structure shift would have been right here or right here, depending on the type of trader you are. If we had SMT, so if like ES had not taken this low yet, and it was like all the way up here, I would have taken this fair value gap. And we would have been moving a lot. And then I would have looked to take the regular entry that I would have taken. So I would have taken an entry at 950.75. Yeah, with my stop right here. Where's 950? Is that, yeah. So 950.75. Stop here. Just better risk, 1 to 3.5. But there's no SMT because, as you guys can see, we took that low here, and we took that low on ES as well. Oops. Oh. What time is it? 12:35. Time we get in 12:15. So we've only made one 15-minute candle. Yeah. Still forming this one. 9 minutes left on this one. So if we revisit here, because a lot of times like price can just tap and then go and not give you the model, and then if that doesn't happen, then we don't execute. If we inverse this, I will look to add one more contract. And inverse means if we close above, if we tap it, or if we close above like enough, I'll add another one. But look, fair value gap, internal. People move their stops right here. Higher high, higher low, higher high. People move their stops. That's money. Let's see if we close above here. 20 seconds left. See, we didn't even touch 18,000. Those round numbers, like those round psychological numbers, they matter. Oh, Oh, I hate when price does this, closes on it. I'm not chasing. If we close again, like a small candle, I'll add back. Like, I know that we opened right here. I just gotta make sure, like, I want it to count, you know? Because I don't want to add for no reason. If it closes closely in here, though. Well, there you have that. As soon as we close, I'll set the limit. Oh. Or I might just buy.
Order filled.
Now I just added to my position, so I'm back in 2 contracts. Stop still at break even. Relative equal highs right here. Let's see. But notice what I mean. When price is going in your direction, bullish fair value gaps will hold, bearish fair value gaps will fail. So here's the next one. So if the model is correct and we're supposed to go here to buy side, then this will fail as well. I might come back, retap this as inverse. And I don't want to get too greedy, you know, adding contracts, but like this would be the inverse tap. Because now my stop is, you know, right here as opposed to right here. But we already manipulated, and then we made fair value gaps. So as much as this, we have this inverse, and we made this one. Now, really, I would like my stop to be below the candle that made it, but, you know, whatever happens, happens. I'm still confident that we're going to be headed here. And if we're not, we made money, we're still risk-free. And there we have that. Respected consequent encroachment of that inverse. Solid. Now we're it's like this one is someone holding, but also the inverse held. So when you're confident and you've built a conviction in the narrative, then it doesn't matter what happens, you should still be able to hold this trade. And if they get taken out, are you losing money? No. If you get taken out up here, are you making money? Yes. The number one job is capital preservation. Wait for the setup to come to you and call out to you, and then you execute. Remember, my entry was supposed to be right here. And even though we didn't make a new fair value gap, let me clear this off so you guys can see. Notice this came all the way back down here. No fair value gap, but still am able to execute on the 1 minute chart, recognizing where manipulation is happening, understanding what's being respected and what's being disrespected. Relative equal highs, great draw for liquidity. So now we just wait for it. And if price came all the way back down from here, yeah, you get pissed. But you know what I'm saying?
Order filled.
That's great. Stop got moved up, move this to 1. Still break even trade. And we're just gonna move this to 18,000. if we start to struggle after we get here and we don't displace through these highs, then we come back down. What have we done? We've created liquidity. So still see this coming. We honestly could come all the way up here, but I'm not holding that long. But that could be the start. That what I was saying is if price fails to displace through and then starts to, make sell side, we will retrace back to equilibrium of this move, and it will be just the same move that I took on a larger time frame. So you have sell side of the curve, buy side of the curve until external is taken.
Order filled.
Oh, that get taken out? There you have that. Delete that. A great day in the markets. Up 1,200 on the day. 1202. Solid. Hope you guys learned something. And